All right, this is Jeff Scott, and welcome to today's webinar. This is September 9th, 2012, about 12:50 p.m., and this will take approximately 1 hour. Frankly, I saw a Bruce Springsteen concert this week. He played from 8:15 to midnight, and some of my friends commented to me afterwards, only about a half hour less than my typical webinars. So I'm going to try and keep it to an hour and get through the content. As you can see, my email address is here. I'll post this on YouTube, and this will also be placed in the HGSI users forum. And appreciate you being here. And just a couple introductory comments, and let's get going. So it's educational purposes only. Any recommendations are in the spirit of education and not investment advice. I'm a physician, not a broker. Most physicians lose money with their investments, so take anything I say with a grain of salt. And I'm not affiliated with any software vendor or trading company. The tools demonstrated are those that I use in my daily trading. I have paid for all the tools I will be demonstrating. And this is exactly what I do on a nightly basis, probably a little bit more exhaustive on the weekends. What I will do in the next 45 to 55 minutes will be my review. I'll look at the market, get an idea of what the market is doing, because that's going to dictate what I'm going to do from a trading perspective. Using top-down techniques, I'll look at the marketplace, the industry rotations and stocks. I will look at some of the shortcuts that I use to find stocks. I'll start with my topping index and why I did that index. And I'd just like to let folks that are looking at this on Sunday know that later this evening I'll be doing a guest webinar on www.magentatrader.com, where I'll also be having a special offer provided by the folks at HGSI for those that like to subscribe. Go ahead and we're going to start. Should have a clean screen because I've got way too many icons. My lovely wife, who's always watching over my shoulder. A couple of different things. When I trade, I need a couple of tools. And I'm going to go through tonight most of the tools that, frankly, I use. I need a real-time trading tool. And what I use for my real-time trading is I use either Thinkorswim or I use TradeStation. Unfortunately, I've got a problem, and the problem is I've been using TradeStation for a long time, and I've invested in a large number of strategies and analysis techniques and indicators that I would lose if I move away from TradeStation. But Thinkorswim, I'm starting to rebuild out all the same capabilities, and unlike TradeStation, Thinkorswim doesn't cost me anything. I just booted up Magenta Trader, which is a seasonality tool that I use that I'll look at today. I mostly live in Agro Stock Investor, which for those who are unfamiliar with it, you'll learn a little bit about it in the next few minutes. And let's go ahead and let's jump right in. Back to the slides for a couple of quick comments. These two folks here, Ian Woodward on the left, Ron Brown on the right, are the secret weapons of HGSI. George Roberts and Matt create the software and update it and continue to improve it. But Ian and Ron have really done an amazing job of teaching a relatively small number of us, but hopefully a growing number of us, how to trade for ourselves. Although I call them my gurus, they really like to tell us that they want you to be your own guru. Great teachers, and also have really developed some really neat things which we'll talk about tonight. If you've never seen them teach, they offer seminars twice a year in Palos Verdes. I'm there every year, twice a year for the last decade or longer. $1,250, best education dollars you'll spend, includes meals and, frankly, a lot of entertainment from Ian and Ron. If you've not been to the website, www.highgrowstock.com, on there, a couple of things that you can find are some free reports like this from Ron Brown. He does them weekly. He was unavailable this week, so I decided to do another one. Really didn't ask him if it was okay, but I enjoyed doing it. I figured, what the heck. Under reports, every week when he's doing them, which is probably 40, 45 weeks a year, great 15-minute reviews of the market, and then they have a free trial for those that are unfamiliar with free data. So first question I always ask is where are we at in the market? Not going to spend a whole lot of time here, but I can tell you the type of stocks that I like to buy go up like a rocket and fall like rocks. And I have to know whether I'm in a markup, stage 2, or a markdown, or if I'm in a stage of uncertainty, sort of a Darvas box. And that helps guide me in my decisions of buying and selling. The other thing I'd like to point out is that this picture is very fractal. And whether I look at tick charts, minute charts, weekly charts, daily charts, hourly charts, I can find the same pattern over and over and over again. If I break it down to the components, I've got going up, coming down, and going sideways. And I know that when I think the market is going up, I want to buy at pullbacks. I buy at pullbacks for one reason. Well, for a lot of reasons. They're higher probability because I know where to put my stops. But in reality, in a strong uptrend, probably doesn't matter where I bought, I probably made money. In a downtrend, how do I make money going long? I have to buy here and sell here. I'm not that good. I have a day job and a family. But I can make money going short, or buying contra ETFs is what I prefer, or buying puts. And again, I want to go short during times of retracements. But again, on a very rapidly falling market, probably didn't matter where I shorted the stock, I made money. Now, rapidly falling is not an understatement. I have learned sometimes the hard way that markets fall much faster than they go up. And then where we've been over the last several weeks, perhaps, has been dancing in a Darvas box where runs up to resistance, pulls back to support. And so if I go back to this prior chart, we've been living in uncertainty. Now, uncertainty probably tilting up. What we saw Thursday and Friday may have been breaking out to the upside. And I say may have been because we still have Bernanke to disappoint. We still have the German Supreme Court to say, no, they're not going to fund the survival of Europe. But right now, I'm leaning towards the long side. On the website, there's a thing called the Learning Center. If you enjoy this webinar but really want to learn more about HGSI, then you need to go to the website, go to the Learning Center, which is under support, and there's a lot of free education there, mostly about the program, but good stuff about the market. So in parting, before I jump into my presentation, be your own guru. Investing is a business. Make sure you have the right employees, which to me are tools and software. Your continuing education matters, which is obviously why you're doing this. And trade the market you have, not the one you think you should have. I thought that we were at a point in the month of September, the economy that's starting to slow, the entropy of an election, a likelihood of an Obama win, that we would be in a position where we might expect a tough September. That's not the market we have right now, because balancing that is a major amount of easing appearing worldwide. Chinese going to invest trillions in infrastructure. Infrastructure, think copper, steel, iron ore, heavy machinery. The EU going to float and pay everybody's bonds to keep rates low, as long as the Germans don't say no. And Bernanke probably being forced to ease this coming week after the lousy employment report, which didn't really hurt the market on Friday. I guess it was because that's what the market wanted, to get easing. So I'm going to go right into something that I created last week to start, and then I'm going to go into the market. Last week, I gave a list of stocks which really did not do anything for the week. Some were up, some were down, some were up nicely, some were down badly, but overall, the list was kind of flat. The intent of that list was not to give you a buy list. The intent of that list was to identify the leaders in the market so that you and I would have the ability to pick up a change in the character of this market before the market died. If you look at the 5-day performance, you had some big winners: Ryland Group, Medivation, Ariad, eBay, Lumber Liquidators, all had a very big 5 days. 3D Systems, Pharmacyclics had a more challenging time. Mellanox had a horrible Friday, down almost 8%, but it was only down a little bit less than 2% for the week. A couple of other things here. If you look at where the strength of this market has been, To be in this list, you had to be a leader. That meant you had a lower left, upper right chart pattern. You had to be tight for the most part. You had to be big with volume, probably optionable, and you couldn't have much overhead supply, meaning nothing was going to keep you from going up unless the market changed. And the hope would be that these stocks would fall before the market was too late. So apparel retail could have had others like Francesca's store, which fell hard this week. Biotech, I still like my choices. There are others that look equally as good or better. One computer hardware company that died. Home builders, anything in home improvement doing very well. Internet software, eBay. Oil refiners have been very strong. So a nice balance, no more than 2 or 3 in any industry, leaders in the industry. And what you should see, and this program allows you to calculate an index for this disparate stock group, is you should see an index that goes from the lower left to the upper right-hand corner. And what you have here is an index which, since June, has ran above the 17-day moving average. I don't believe there's been 2 days closed below the 17 since this run started. It tracks nicely above the 8-day exponential, the 50 and the 200. Forget everything else on the chart right now. I will watch this every day. I'm tracking it real time, and every night when I look at this chart, I'm going to look at it as a time to bail. Because when I see 2 closes in my gut below the 17 will be enough. Some people might write it down to the 50. Why? It's run up the 17-day and the 8. If it breaks below those, it's changed. I know from the past that when I've done similar lists or participated in them, such as the one I did in March when I was at the HGSI meeting, what did we see? We saw a list that was running up nicely. Same story. And what happened in April, about 10 days after we did the list? Multiple closes below the 17. Now, I could have held it, hoping that it would come back, but then what happened? Boom. So what happened here is when the leaders fell, I got out. Now, reality is they came back, and they're running again, and there's a lot of overlap. But these things are great early warning signals of a topping market. So now let's talk about the market, and let's jump into HGSI and what I do, and then some of the supplemental things that I do to understand what the market is doing. The designer is my file cabinet. I've got 3 settings. I've got reference groups where everything is updated for me, splits are adjusted, components of ETFs and of major indices and the sectors and the industry groups are all done automatically. I've got smart groups, which I'll come to before the end, where some of the stuff I'm going to show you over the next hour are done for you in an automated fashion. And then lastly, I have user groups, which is my part of the cabinet, where I could put in things that I want to do. The things in the smart groups, the components change daily because what's working best makes it into the groups. Within the user groups, once I put a stock in there, that stock never changes unless I take it out, but it's updated daily with fundamentals and from a technical perspective. The warehouse view is where I spend most of my time in. One of the nice things about the designer group is the ability to import and export things and drop it into other programs. In fact, you could take any list. For example, my leaders list. File, copy to clipboard, text column, go into my trade station, and let's just add it. I'll add it to, stick it down here for the heck of it. Just go in here, and I'm going to put in a label. Call it Labor Day Leaders. And then I'm going to paste them. And I was able to take it out of HGSI, and now they're all stuck in here. So it's just a nice vehicle for me to use. It's sort of the nucleus or the center of my investing routine. We're going to spend our time looking at the warehouse. Now, what the warehouse does, and if I go up to the top and I look at all securities and take out everything in my filters, The warehouse includes about 8,000 stocks, 7,862. It uses two tools to isolate them or to rank them. One of the tools that it uses is called the filter, and I can filter for all kinds of different things, and most of these are built into the system. I could filter them based upon prices and volumes, earnings per share, accumulation, all kinds of stuff, too much to count. I can then rank them using a combo ranker, and I use 3 combo ranks. Predominantly I use scorecard, which looks at both fundamentals, ROE, relative strength, earnings per share group, and technicals, white body, volume, and price change. All right. This gives me a balance between technical and fundamentals. I use this on stocks, indices. I'm trying to measure what's working, what's not working in the marketplace. I use what's called a top-down, which is a balanced because it looks at 1- and 5-day prices, all technicals, no fundamentals, and then it looks at a 13 and a 2-day force. And for those that don't know the force is calculated by looking at volume today times change yesterday versus today. So the direction of the force is going to be how the stock behaved up or down. The amount, the size of the force is typically volume. So things like JP Morgan, Bank of America, and diversified banks have such volume, I can assure you without looking they'll be at the top or the bottom of the force list on a daily basis. So the combo ranking we're looking at here, which is the T1, is balanced, short and long term, or short and intermediate term, but technical alone. And then the other ones that I like are based upon the force, elder force. Let's see if I can find it this way. And I look at predominantly 2-day EMA up that looks at just the 2-day force. It's only looking at price movement over 2 days with exponential moving average. So the daily forces are plotted. It looks at a 2-day, very short term. That tells me what's working right now. There are a lot of different combos there. I use 3 routinely. I play with a lot of them. The edit current view, so we work a lot with views in the warehouse, allows me to select a filter and a combo rank. And so when I build out what I use, I set up the filter, the combo rank, and then I just have to play with the view. So if I was looking at the entire market and I wanted to know what was on a technical basis, I wanted to rank them with the 1- and 5-day performance, the most important, and I go up, rank it by raw combo. This is where on a 1- and 5-day with a little 13-day performance measure, this is where the money was. Now, we're not going to spend any time here because I think we can do better, but it's after the fact, 79% change in 5 days, 20% in 5 days, 13%, 30%, no shocker. What I'd rather do is get to something that I find is a little bit more useful, and I use the scorecard when I look at the market as a whole because it's looking at both fundamentals and technicals. But when I look at the stock, the industries, I use that top-down. So let's go down. Let's take a look at the market. We go to Woodward and Brown user groups, which come with the program. I'm going to look at top-down, and I'm going to rank by raw combo. So this is telling me, based upon 1- and 5-day price movement in 2- and 13-day forces, where the market was strong and weak. So what do I see? I see that a broad-based indicator that the NYSE is up at the top. So let's open this up and take a look at it. Now ignore everything until I tell you what they are, because right now we're just looking at the candlesticks. And within the candlestick pattern, I have an 8-day exponential moving average in purple, a 17-day simple in green, a 50-day simple in blue, and a 200-day simple in red. I could take away everything else. I'd be just as happy with that. Everything else makes my life easier, but I learned everything from the candles and the moving averages. When I look at the NYSE, I see a market that actually gapped up Thursday and gapped up Friday, closed at the high of the day both days. That's extremely bullish. Now, I could worry about this being an exhaustion gap, but I don't think so, because even though there was 2 gaps in a row, when I look at the weekly, and then I put a trend line on my tops, and I'm not as good as Ron at running trend lines, so just warning you. We took out, and this is a pretty good trend line. It got hit 1, 2, 3, 4 times. Last Friday, or last week, we took out the descending tops. I don't call that an exhaustion gap. I think we got a breakaway gap potential setting up, or has set up in the NYSE. Now, that's pretty exciting to me, because I think the NYSE is a great indicator of the market. It includes big and small, broad-based. And one of the reasons that we like, because of that, rather, one of the indicators that was created in HGSI looks at just the NYSE. And Ian came up with this, and he took the best of a lot of other gurus together, and he came up with, I guess I don't have it here. Let's see. Yes, I do. Came up with the best of using ARMS and a trend index, advanced decline volume and ratio, volume and issue ratios, and came up with the Eureka and the counter, the Phoenix, which only look at the NYSE and are sort of exuberance indicators. They're sort of the HGSI or follow-through day. And in this middle ribbon on the bottom, you can see on Thursday we had a Eureka. Very, very strong day on the NYSE. I was a little bit surprised that no one commented until I did on the board about getting a Eureka. What else? Well, volatility was extremely weak. And I would say not big surprise here, because the volatility sort of goes the opposite of the market. But we are getting down to where volatility has a tendency of reversing, and that's usually when the market potentially turns. But it may drop a lot more. Volatility has been weak. Partly what's driving this market is a weak dollar, and you could see here, as I said, a very weak dollar has dropped off the mat really over the last couple of days, probably related to quantitative easing, perhaps related to some strength coming into the euro. Regardless of whichever reason, that should tell us a little bit about what's in our future with the market. As long as the dollar's weak, the market's going to go up. Looking at some of the other things in here, gold should be the opposite of the dollar, and it is, breaking away here. I have trouble with gold. I've made some mistakes in gold. It's very news-driven. If there's quantitative easing on a worldwide basis and stimulus in China, gold will go higher. Maybe we'll get up to that 1,800, 1,900 range. Very news-driven. The stocks don't all look as good as this chart does on the spiders. I love it when it breaks. Anything breaks above the 200-day, pulls back and holds and runs from there. And for me, that's always been a very bullish sign in the market. And we'll take a look at the NASDAQ and the S&P 500, then we're going to move into the industries. NASDAQ, also a very nice up move here. Remember the Phoenix, or excuse me, the Eureka was something that was based upon the NYSE and not the NASDAQ composite. But a lot of the HGSI stocks are NASDAQ stocks. And clearly the NASDAQ is in a nice up move here. Getting toppy, I don't think so. It's getting near, broke out a prior high here, which is a very bullish sign. That might suggest that it's not going to stop here. We'll see what happens this week. If we get easing, it probably runs. That's a multi-year high. And the other thing I want to point out up here is something that's called the high jump. And the high jump is another Ian magnificent finding. And Ian found that if you measure the delta between the price in the 200, the price in the 50, the price in the 17-day simples, add them together and plot them, that when you hit a peak, the market pulls back. We are nowhere near a peak. We've got room to run here. And then lastly, as I said, the S&P 500, because I put some drawings on this last week, which have sort of kind of interesting to me. has been sort of in a Darvish box-looking thing, but in an uptrend. Resistance, support. Now, support looks like it's moved up. So I think we've got some more bullish days ahead, unless the news is bad and the government, Bernanke could disappoint. Obama could take a big lead in the polls. That could probably impact. Israel could nuke Iran. But short of any major news-making event, I think we got some more upside. I put my leaders index, which still looks strong, this market that looks strong, no volatility and the dollar dropping, stimulus coming, it makes you want to feel bullish. Now, I really don't want to be bullish, to be honest with you. It's September. September's the worst month. You got Iran, you got Israel going to go after Iran, you got Iran in the Straits of Hormuz, you've got oil above 90 a gallon, you've got our unemployment still bad, you've likely got a Democratic win of the White House coming next year or in October. I guess this is climbing a wall of worry, but the market seems to want to go up. I will use that leaders index to tell me when it's time to bail. So let's look at industries. So using the top down for a second, so this is the balanced technical. I don't really want to know what industry worked 2 weeks ago, so I really don't care about the 13-day force. So I'm going to take that out in a second. But you could see there's 142 different indices. You can also see that on the more balanced approach, gold, the big banks, miners, banks, finances, oil, gas are leading the way. But you know what? I want to look at what's happening now. So I'm going to look at that 2-day force. So this is going to tell me which are the groups, industries, et cetera, that are moving the most over the last couple of days. And in top-down investing, I want to know what's working now, and then what are some of the best stocks in those groups. So if I right-click on Other Diversified, change to Index Group, these are the stocks in that group that are working the most. I usually find the index, and I only want to look at stocks above the index. And I mentioned because of volume, these things have wildly giant forces. So in the essence of time, I'm going to look at only one. My favorite here is J.P. Morgan Chase. And as I look at J.P. Morgan, I see a stock that has, we're not there yet, it's coming, pulled back from being up in the mid-40s, just broke up above the 200-day, had some kahunas on Friday. So now let me talk a little bit more about what I've got on my picture. The blue and red kahunas and the kahuna force are some indicators that we use in HGSI. Again, kudos to Ron and Ian. Assume a Bollinger Band has a, I think it's a 50-day average in the middle, and then it has volatility bands, a lower and an upper, that are based upon, that go wider and narrower based upon the volatility in that issue. Assume that percent B measures between the lower and the upper band, and assume that a stock usually lives within this. Now, sometimes they go below the lower band, of which they're going to probably snap back and go up. Sometimes you get above the upper band when they're going to snap down. So if I told you the percent B was less than 0, you know where it is. If it's above 1, you know where it is. If I told you it's 0.5, you know where the stock is. Now, because of Ian and Ron's research, we know that big moves, a 24 or 40% move in percent B on a given day, are stand up and notice. And they tell us about optimism and momentum or pessimism and bad momentum down, whether it's red or pink, in an index or a market. So these are HGSI indicators based upon percent B that tell me to pay attention. Up here we have the bongos, which are another momentum indicator, elder force, we have accumulation distribution, and we have our high jump, and I'll probably talk about each of them as we go. And when I look at stocks, although maybe it's time to stop looking at data, I have a tendency of bringing down the fundamentals as well. So I see a stock that's pulled back. It's based for quite some, for a month on that 200-day moving average, moved up above a kahuna. I like it. I'm going to throw that into my watch list. But one of the things I'm going to do is I'm going to open up my magenta, and I'm going to put JP Morgan in, JPM, and let's see how it does this time of year. So the magenta users will recognize I am not a magenta power user yet. I'm working on it. And what I'm trying to do is make sure that here's the price. Here's a synthetic price chart reflecting 5 and 10 years worth of price movement. In fact, I could actually open up and see all those different, let's see if I go into, all right, so they're all, so you can see I'm looking at every year from 2002 to 2011. And you can see the 10-year and the 5-year are pretty superimposable here, although there's some separation back there. And what I'm looking at then is this 5-year seasonality line, my current price, and then what I did is let me go back, put the scanner on positive, and it shows me positive seasonality coming in here. I can put it on both. You can see when it's positive and negative. I'm going to set it relative to current earnings, and relative to current rather, and I see that there's some bullish time coming in to JP Morgan. So if I was interested in buying, again, I'm not a power user here. I'm learning to be a power user on magenta, but I like to see that it's a strong part of the market when I go and I make a buy of a stock, and I think I see that with JP Morgan. Essence of time, I'm going to bounce back and look at another industry, steel. Now, why would steel be up? You're going to see a lot of ugly looking stocks. Now, I actually bought some Cliffs Natural within the last couple of days, and I bought it because of the price pattern. It was not a high growth stock. I bought it because I thought it was going to swing back up to the 50, and then China decided to ease, and I think we're going to see some worldwide easing, which is going to be good for all these stocks. If China is doing an infrastructure play, which is what they said on Friday, steel, ore, coal, gold, copper, heavy equipment companies are all going to pop. So this is an ore plus coal company. Certainly been in a really bad downtrend below the 200-day moving average. You notice how that 200-day moving average was resistance. Then it had resistance at the 50-day. I picked this pivot up here a couple days ago, and I think it runs up to the 50-day, and then all bets are off. If it can break above the 50-day, maybe it can run up to the 200-day, which would be pretty nice. Kahunas came in, gigantic volume. The volume thing is what triggered me to look at this. I'm sort of intrigued by this. It's not for the faint of heart, and it's a high-risk play, but you're going to see this picture over and over again. Vale used to be called Rio. It's a South American ore play, big servicer to China, already moving up to that 50-day moving average. Same looking picture, United States Steel. At some point, it's going to be a good time to buy the stock, but you know, is it just going to run up and come right back down? Again, I go to magenta. This one isn't as pretty. So I integrate all those tools that I mentioned, and I'll talk probably a little about TradeStation. So what do I see here? Weakness is still in U.S. Steel. So probably no reason to jump into U.S. Steel just yet. But boy, there's some big strength that come into the market at the back half of the year. In fact, if you look at Thanksgiving time for really through the beginning of January, about 90% long wins versus losses with a 14.2% average win. Not a bad move, but not yet. So not going to jump into U.S. Steel either right now. Anything else here I thought was interesting? Nah. They all look a lot like Cleveland Cliff. Again, if we got rotation in the market, and that's what I'm looking for, there might be a lot of strength coming in here. Oil and gas exploration, these have not been in favor. I look at where the index is. I only care about the ones above the index. I'm going to look at two here. I'll look at Pioneer, which I think is one of my favorites in this group. and then Continental Resources. So, as you can see here, Pioneer Natural Resources, let me go to a weekly. A lot of calculations are occurring here, which is why it takes a little longer to write these charts. So Pioneer Natural Resources had a major bull run, which died about a year ago. It had topped as high as close to 120 when it ran up again in the beginning of 12, pulled back to about 80. It's about halfway retraced right now. Looks to me like it might be getting ready to run. Let's go on a daily chart. Why do I say that? I say that because it broke above the 200-day moving average with big kahunas and a pocket pivot from Morales and Katcher, O'Neill on Steroids, guys. Great book. If you haven't read it, How They Made $18,000 in the Market Practicing the O'Neill Disciple. Chris Morales. Gil Morales, Chris Katcher. Sorry, guys. Messed up your names. Everything up here on my momentum indicators are green. Like this chart, potential breakout. Now, it closed. Let's look at the dollars here. High of 103, closed at 103.17. Low was 99.27. I look at the 200-day moving average is at 98.19. So if I put my stop at 98 and a dime, maybe 97 and 80 cents, something like that, and I can get into the stock at 103.21 at the high of the day, I've got 550. I got about a 5.5% risk here, and that might be steeper than other people want. But I know that's the lowest I'm going to put my stop. And if it violates the 200-day moving average, why do I want to be in this stock? So I'd probably set my stop if I bought this close to the 200-day moving average and take it up to halfway up this bar if it trades up and closes up on the next day. The other one I liked with the same pattern was Continental. Again, deep pullback, resistance at the 200, resistance at the 200, resistance at the 200, broke the 200 with kahunas, with the pocket pivot. Everything is green. I'm looking for this to retrace back to the 200 and hold, and I'm in. So this is one that I'm going to look at as well. I like pullbacks. You're going to see that over and over again as I go through my favorites. Let's look at the diversified metals and minings. So what did I say before? China stimulus, building, copper, steel, ore, gold, heavy construction. Freeport-McMoran, the kings of copper. Deep pullback. Has been a dog. Maybe time to come out of being a dog. Ian once taught me, Jeff, lots of kahunas in 2 or 3 days, pay attention to it. I've had 4 kahunas, 5 kahunas up, 1 down in the last 7 days of trading. Gigantic volume. Both these are volume charts. Sometimes I can't see the volume underneath the indicator, so I have 2 lists of it. Gigantic volume on Friday. This is in my book, is a major breakout on huge volume of a stock that has been historically a great play in times of expansion, especially in China. And I think we're going to see that again right now. So my take on it is that this is, if this recovery goes on and if we have easing, I like this one to be a leader going forward. I have a position in it, so I'm biased. If I was to take a position in it now, I know where my stop goes. I'm not going to let this thing drop below the 200-day moving average. I might go even halfway up this bar. Why? Because my hypothesis is going to be that it's going to pull back to the 200 and hold and run from there. So if it closes below the 200-day moving average, I'm wrong, I'm out, I take my stop, I take my loss, I move on. I like this stock. In this other category here, Southern Peru Copper used to be the old Southern Copper. Another predominantly copper company, probably the second or the largest in the world, and you'll see a similar pattern as Freeport-McMoRan, except was already in a nice comeback from earlier this year, pulled back to the 50, running again. Perhaps a little bit less risky, it's already trending up. On the other hand, I like the fact that I'm really close to that 200-day moving average, which I know where to put my stop. You had a bunch of coal companies that, for reasons, it's got to be the same China stimulus, because I don't get it, also are bouncing. Now, I showed you Cleveland Cliffs, I believe, a few minutes ago. These are all like Cleveland Cliffs, and that they're going to go up if the Chinese stimulate. Lots of overhead resistance here. Obviously not a leader, can't even get above, for a while, the 17 and the 50-day. We'll see if it can get above the 50-day here, and then it'll get stopped here. Once was a leader, believe it or not. This was a cha-cha-cha stock 18 months ago, and had a huge run-up, head and shoulders pattern, broke it, and long forgotten as a leader. So for those who haven't been on a webinar with me, this is what I do. This is top-down investing. It's looking at the best industries, looking for the best stocks. Semiconductors, then we'll look to the dark side, and we'll show you some other tricks. My favorite semiconductor here, let's look at Spreadtrum. Oh, Skyworks and Spreadtrum. I'm not going to look at First Solar. I don't like the second name, Solar. So Skyworks, I believe, is a supplier to Apple. And we're going to look at these two, and if I don't like one of them, I'll look at Sirius. So beautiful picture. It's kind of loose, but in an uptrend, not overly extended. As you can see, the high jump, everything's green. Had a Kuna on Thursday, had a doji on Friday. Tendency after dojis, according to Stephen Bigelow, my candlestick guru, is they move the way they open. So we'll have to see how this thing opened. Spreadtrum is a stock that had a deep pullback that's moving up again. So not a little bit extended here, so I'd probably be careful. Cirrus has been probably the leader of this group. You notice not Intel. And you can see Cirrus right here, gapped up here, except for the gap, relatively tight, clearly a market leader. Has gone from about 22 to 45 in about 6 months. Great earnings per share growth, trades at a multiple of 36, doesn't pay a dividend. Clearly a leader, and I'd be right-clicking it, throwing it into my buy list. So if I was not worried about the time and saying I only got about 20 more minutes before you're going to turn me off, the next thing I would want to do is I'd go down the list, right-click back, but let's look at the negative force. So 89 up, 6 down. Again, more evidence that the market is strong. So computer hardware was a negative. We changed the index group. And this was one of the dogs on Thursday and Friday. 3D Systems in my leaders index. It had a bad week. And we'll talk about why I put it in the index and what it looks like right now. So one other thing for people that are new, I'm using a slower computer because of the resolution on this. When I use a computer that has a NVIDIA or ATI graphics processor, it's much quicker and snappier. You'll notice that this has been a lower left to upper right-hand corner. That's a leader. And it had been relatively but not perfectly tight. You'll notice it stayed above its 17-day moving average for the last month. For the most part for that month, it's been above the 8-day exponential moving average, very bullish. It's been above its 50-day moving average the entire run. That is why this made my leaders list. No overhead supply, lower left, upper right, and it's got volume over $2 million, at least on Friday. Take another date, 600,000, another date, 400,000. 1 million. So it's got enough volume for me. I usually set it at 250,000 on my filter. Some people may want more. So it came out with bad earnings, and that's why it tanked. Here's your negative pocket pivot. Now, there's no reason to not have been out this stock when it took out the 17-day moving average. That's what's kept me in. Now, the interesting thing is, intraday it took out the 50. It's bounced from the 50. It might be time to start to look to nibble. I'd like to see it base a little bit, maybe take out the high of this day before I'd even consider it. But it pulled all the way down to the 50. My guess is it runs from here. It might have to base for a while. Don't buy this one. It's not a leader right now. It's a fallen leader. All right, so we've looked at top-down investing of how I find stocks. Let me show you a couple shortcuts. Shortcut number one, pick your favorite view. I'm going to go to scorecard. All my scorecard no indexes, I took out some, I didn't want to look at indexes, so I took that out. Then to go up in the designer area to smart groups. Click on it, HGSI strategies. So a couple of things are here. The Morales and Catcher pocket pivot guys. There's our pocket pivots from Friday. And every day it will update automatically where the pocket pivots were. I own this stock. It's a great stock. The next couple I don't own are also good stocks. Pocket pivots, you have to read the book, but it's volume. It's a moving average story. It's a great momentum indicator. And here's a stock that was talked about on the board. And my question for those people talking about it is, where were you in July? Because it broke above the 50-day in July, and that I've been in the stock for quite some time. You can see the group index took up, and lots to like about this chart. Getting near the top, so it might be pulling back, but this has clearly been a leader. Now, so this pocket pivot picked it up here. Would have picked it up at the time of the move. So pocket pivots are a great tool. So you might just want to look at the pocket pivots. Now, you want more. In here are a number of planned searches that list stocks. Those are the best ones under 10. Best criteria. ERG 240. ERG is a combination of earnings per share rank, relative strength, and group rank. You want it to be above 80 for each or above 240. So these are highly rated groups. So how about if I teach you how to find which stocks make it into the most of those lists? If being in a list is good, being in a lot of lists must be better. I'm going to go into tools. I'm going to go into group. Say I went to designer, my bad. To designer. Let me shut some things down here. Go into designer. I'm going to go into tools, group inclusion report. I'm then going to figure out which groups I want to look at. I'm going to look at Morales and Catcher's pocket pivots. I want best criteria. I want that ERG 240. I want growth stocks. These are picking the best 20, 30, HGS 100, leaders, quarterly EPS, strong EPS. Make group from report, we're going to call it top 10 GIF web. I'm going to hit OK. Top 10 web. No. And these are the stocks that were the top stocks based upon this report. Now watch what happens. I'm going to go into my user group. Here it is, the top 10 stocks that we just picked. So let's look at these very quickly. Unfortunately, in this computer, no such thing. Alexion Pharmaceuticals, drum roll please, biotech champion of the decade. Love this stock. We talk about it in every webinar. Someday it's going to correct. Look at this weekly chart. All right. How would you like some of that action? August 2010, September 2012, it's gone up 4 times. Right? I bet if I pull out monthlies, you'll see it even more extended. Great stock, clearly a leader, not very extended if you look at the high growth jump bar because it has based, maybe even a little bit of rounded bottom down to that 50-day moving average. We talked about it on our webinars, giving us a chance to buy at the 50, pocket pivots, going to run again, clearly a leader. Cabela's don't get this store because I spend my time doing webinars, not being an outdoorsy person. Tight chart, nice move up, running again, perhaps lots of pocket pivots. We just looked at Calumet. Are these not the best stocks right now? Dillard's, retail, also a leader with pocket pivots. Lithium Motors, acquiring retail automobile distributors throughout the country, a leader. Pulte, probably a little extended, but a leader in the homeowner category. You see it getting up to the top, as are everybody else in its category. Questor, the ups and downs king. Ran up here on some news that really wasn't that important. Next day the market realized, took it to the cleaners, running again almost back to where it came from. Hope Myrna's still in it. Great earnings per share growth. Everything went green on Friday. A leader again in biotech. Ryland is another home builder. And Transdigm, I think a big aerospace company, big expensive stock. So point of this, and here's if you like choo-choo trains, this Greenbrier and Mental Block, Wabtec, 3 railroad train car manufacturers all doing the same thing. Deep pullback, pulled up above the 200, going lots of kahunas, love the stock. I wasn't trying to teach you stock charts there. I was trying to show you that a simple test pulled out the best stocks in the market and put them on your web. I bet you if you bought those stocks, I didn't say that. I bet you if you track those stocks and the market keeps going up, those stocks are going to do remarkably well. Another shortcut I do is as I look at the smart groups, I look at the GIF. David Ghilardi, good buddy of mine, put something on the web and taught us ages ago about his sprinters. Let's look at sprinters. You throw it on all securities. For me, this has been a very happy place to go fishing on. So sprinters, Ghilardi's, nice addition to the board. White body, volume, revenue, moving up wilder strength. Earnings, price, trailing 12 months, percentage going up. Industry doing well. A lot of Bollinger movement. Some technicals with force. So it's really a fundamentally strong group of stocks with good technicals, but fundamentally very strong. And this is also a very nice place to go fishing from. I've got one that I put on the board recently that I got from Robert Minkowski a lot of years ago called Top Bongo Stocks. And we're all going to have the things that we like, but what this view invokes a filter and a combo rank, buying me the best fundamental stocks and ranking them with the Top Bongo combo ranker gives me a list of stocks that I don't want to buy, that I do want to buy. You've seen many of these already. Another one that's pulled back and breaking out is United Rentals. I've got about 10 minutes by my clock, maybe a little bit less. My fantasy team's up 37-3, so I'm happy, so I'll do this for a few more minutes. United Rentals is a company that had a very huge earnings run-up, did an acquisition of one of its larger competitors, and then announced the integration costs were more and savings less than they anticipated. Stock sold off. It's been sort of living around the 200-day moving average. Had a pocket pivot on Tuesday, moved up above the 200-day, a couple of kahunas. Everything has turned green. Got me a little bit interested. Don't know if this is even a magenta stock, so I would probably look at it. When I say it's got to be old enough. And what do you see here? You see a stock that's going into a bullish part of its year as well. You can do scan on Magenta and find the stocks that Magenta likes, and then I can look at the patterns. I like finding the stocks that I like here and then scanning and then looking at their patterns on Magenta. So I might add this to my buy list. A couple comments and then something I'll probably stick up on the board. One of the things that you can do is in that designer, you can highlight anything, go into group performance analysis. You can select the groups that you want. You can set your time frame and parameters, and you can look at how things have performed. So I did one this morning to get an idea of how my stocks and my list perform versus the market. So this is, it says Monday to Friday. It was probably Tuesday to Friday because the market was closed, I believe, on Monday. And first thing I do, everything's black. So I know the market must have had a great week. I find the S&P 500 and I see that the S&P 500 was up 2.23%. I see that the IBD 50 from Investors Business Daily basically mimicked 4-to-1 winners to losers, mimicked the S&P 500. I find the HGS 100, which is a little bit broader, actually was a little bit better, 99 to 16, so 9-to-1 and 3.23%. I look for the stocks that I owned going into the week, and I have a lot of accounts. And no, I don't subscribe to the 10-position rule, but much of my stuff is automated. We're up 2.93. I knew it was a good week. Now, this isn't my exact performance because it's using $5,000 per stock, and I got different shares, and I got different protection schemes and things like that. And it doesn't take into account things like Lulu that I got lucky on and bought in the middle of the week. But what it shows me here is the bottom fishing for nuggets and pullbacks, which is what I like to do, we're working. 4-to-1, 14-to-1, about 6%. Reversals. So I look down here and I get an idea of what kind of stocks. Education services. I told one of my good friends last weekend when we went to see Bruce Springsteen, the only thing longer than my typical webinars, to buy education stocks. They ended up having a great week. ESI was up 4.38 or 13%. DeVry was up 10%. Questor we've looked at, you can see where the movement was. These are stocks that made my pullback. So last week, all but one pullback and one bottom fisher did well, and the ones that didn't do well were flat. We'll look at the reversals. Same types of stocks. So I like to see which searches are working and which are not. And so just as I conclude, what I then do is I look at a lot of charts. And this is where I'm a whack job, besides the fact I do these webinars and I don't sell you anything. So I started off last night around 8 o'clock at night. And let me take off my filter. But I thought I like to look at charts. And everybody knows me knows I don't look at them because I have to. I look at them because I want to. And so I put together a watch list that had, I bet, 400 stocks on it. Let's see. 99. So I looked at 441 stocks that I thought were potentially bullish. I looked at 150 that I thought were bearish. I took this bullish list and I looked at every one of them and I got it down to my buy watch list, which has too many stocks, has 48 stocks. I then took my buy watch list and I took out the index, so it's 47 stocks. So what do I see on this? I see construction, farm machinery, heavy. I got 5 of these things showed up with my best 47. Hint, we call that a wolf pack. Those things are moving. Last week was all the educational services, oil, gas equipment, oil, gas refining, oil, gas exploration. Something's going on in the oil, gas. Home builders, gold are still strong. Steel, where'd that come from? That's where the strength has come into these are where I saw the strength. I actually really like the pattern on U.S. Airways Group. And I'll show you one more thing, and then I'm going to say goodbye. One more thing after this. Love this chart. Big run up, rounded bottom, broke above the 50-day moving average after 2 pocket pivots and a kahuna. Everything turned green, makes money, growing. You know, it's going to probably announce a buy of American Airlines in the next few days. I just know it from the news like everybody else does. And although sometimes acquirers drop, it'll probably shoot up because it's taking out a competitor. All the airlines will do well. I really like U.S. Air. Last thing I'm going to show you is something that I'm going to put up on the web. At least it'll be on HGSI. I take my buy list, and then I break it down into buys by type. EPS All-Stars are things that have broken out that have great earnings. Leaders extended or gone are things that are probably too late, that I'm going to look for a pullback. Pullback ready to run, we saw Continental, we saw United Rentals. I think I showed you Freeport McMoran. These are stocks that had pullbacks for the most part across their 200-day moving average and have had a kahuna or a pocket pivot. Pullbacks waiting for signals are waiting for that. Priceline is one that is looking interesting to me, but I want to see evidence, whether it's a candlestick or perhaps a kahuna or a pocket pivot. And then bottom fishing, now I'm not ready for these yet, but they're on my watch list as interesting things. So basically, I'll put my watch list out. I'll try to put out on a weekly basis. You realize that once I put it out on the web or I put it on the website, all my stocks are going to go down and the market will pull. So let me say it to be perfectly clear. This is a list of stocks that I find interesting. I have no idea what the market will do on Monday, and I will not have any of these on a buy at market on Monday. However, if the market is moving up, I expect these to be leaders. And if the market is moving up, then I will be looking at individual stocks here to go and buy. And when I looked at my GPA, oh, I killed it, didn't I? All right, let me pull my GPA up. And that'll be the last thing before I say goodbye, or say toodaloo until I see you later on. If I look at my GPA for last week and I want to find my buys, 49 stocks made my list. Now, not even Kramer gets 42 wins and 7 losses. Beat the market. Use it at your own risk, but it's because the market went up. So I will put that out there. I'm one of you. I'm not a guru. I just like to tell the story. Everybody have a great day, and for those I see tonight, thanks. I'll see you then. Again, kudos to Ian, Ron, George, and Matt for HGSI family, and Derek for Magenta Trader, and everybody have a great day. And please comment on YouTube and on the HGSI user forum if you want me to continue this, or I should stop spending my time doing this and spend more time with my family. Thanks, everybody, and good night.